I am a client portfolio manager, which means I sit on the investment committee, but I don't have a vote. That gives me the freedom to move about and talk to clients about what we're doing and how we're doing things in the portfolio, but doesn't tie me to a Bloomberg terminal. At Morova, we are a dedicated sustainable investment firm. We make every measurement, every company that we invest in, we measure against the Sustainable Development Goals to make sure that they are a sustainable business. We start by looking at long-term trends that environmental, social, governance, and technological, and look for companies that are leaders in that space. Then we look at how they run their business. Are they within the framework of the Sustainable Development Goals? Do they have good governance policies? And the last stage of our process is to measure the fundamentals. We want to see that there is strong return potentials from each of the companies we invest in, because it's not only important for us to have a sustainable portfolio, but it's important that we help clients meet their future liabilities. Our engagement process has three primary functions. The first is direct engagement. This is where we would measure individual companies against the Sustainable Development Goals, look for deficiencies, and then engage them to help them overcome or meet those deficiencies. The second phase is group and the collaborative engagement, where we work with the UNPRI over major issues like supply chain in textile and Arctic drilling, large issues like that. The third and final engagement process for us is advocacy, where we work at the legislative level, trying to make space for, make it easier for plan sponsors to add a sustainable option to, say, a defined benefit plan, or help create a level playing ground in terms of language used to describe sustainable investments. As investors start to demand better alignment with their values and with their investments, asset managers and the like are really beginning to think very carefully about the businesses they invest in. They're using ESG factors to look for quality businesses and good behavior. Given that today the value of a company, its stock price, is 75% goodwill, that is a very important thing for companies to consider. How are they viewed by the marketplace? What sort of behavior might they engage in that would erode some of that goodwill and thereby lower the stock price? So the market is becoming more keenly aware of its environmental, social, and governance policies and making sure that it is matching the expectations of investors. Well, since I'm here today to talk about voting and engagement, I would say some of the most interesting things that have come out of the forum is giving asset owners tools they need to better understand how their asset managers are voting and how to frame their own voting and engagement policy.